you guys have heard me talk about that there's massive opportunities going on right now in the real estate market, right? And if you guys have heard me talk, there's always these things that happen, like an accident. It didn't just happen. You missed something. So maybe you turned out in traffic and you didn't see the other car. Or maybe you did see the other car and you thought it was going to slow down and stop, and that person was on their phone texting. Like something you missed, but it was there. You missed it. You didn't see it. And there you go. Bam. You get hit by it. But I'm telling you guys this time, if you're an investor, if you have money sitting in an account, bank account, retirement account, cash, sit in the shoebox at your house. Now is the time for you to actually become an investor in real estate, in cash flow real estate, income producing real estate that pays you and you get the benefits of it. So I'm going to go over what the opportunity in the market is now, because it's one thing to be like, oh, it's a giant opportunity, and then nobody shows you what it is. So here they are. Right now, number one, this one, Trump 2.0. That's happening, period. Everyone sees this one. With everything going on right now, President Trump is shaking up everything that's going on. Doge, catching a bunch of government overspend, overreach problems, sending checks to people who don't exist, giving contract. This ain't new. I've been talking about this for a long time, right? Before I even opened up to the public about raising money, right? Going to you guys, talking about raising money for real estate. I've always said, like, hey, there's people out there that will land a government contract. They don't know what they're doing. They have no resources. They'll go and apply for it because they beat the system, and they got a check. And now they're like, man, what do I do with this money? So that's happened. But there's a lot of people who have been doing that. That's been happening for centuries. That's not new. But Trump is shaking all that up. Doge, Elon Musk, all these guys are going out there and finding this stuff and disrupting the economy, our economy, and other economies like Europe, India, Japan, China. Like a lot of stuff is happening in the world. And he's also going out and he's like pushing Russia to break up the stop the to do the what's it called, ceasefire with Ukraine. Ukraine came over here. Their president did not have a good look talking to our president. Like there was a lot of things happening that Trump's been shaking things up. And if you take a look at like CNBC, what's going on in the stock market, there's been a giant pullback, right? It's been like day upon day upon day of the stock market coming down, right? A lot of problems with that, with a lot of what they call it, consumer sentiment is low. Basically, people don't have confidence. So the lack of confidence, and I'm talking about institutional investors, big companies, heavy, high net worth people are pulling back, going into bonds and T-bills and gold and a bunch of other stuff. But that's happening because of the president. That is what's going on in the world right now. And if you don't take advantage of this disruption in the economy, the global economy, you're going to miss it. Next, taxes. The unsure people aren't sure about what's going to happen with the tax thing, right? They're like, hey, taxes are going to go up, tariffs, taxes are going to come down, and we're talking even on real estate. Everyone's hoping that they turn back the clock on accelerated depreciation and cost seg. Like if that happens, that'll be massive, right? They're talking about also with the corporate tax, lowering the corporate tax from I think it was like 19 back to 15 or something like that. Like everything is happening to the benefit of the investor, right? Next, tariffs. I think they went on and secured the floor on the fact that auto tariffs is coming. And I think President Trump also came up with something that said don't raise their prices. Like that is crazy with the fact that you don't think that it's going to affect people, it affect costs, affect goods, it affects everything. I think when they did the tariffs for Canada and Mexico, we get all our timber and a lot of timber and a lot of wood and stuff like that from Canada. We get a lot of drywall from Mexico. Like all of these things are a part of the apartment building game, real estate, homes for sale, the interest rates. Everything affects everything. It's like a lever being pulled and it affects everything. It's like untying your shoe. A knot affects your ability to not be able to pull your shoe tighter from the top and from the bottom, right? Your foot will fall asleep if you're not careful. Like this is also a disruption that's happening in the world right now. And then the next one is that there's $2 trillion worth of commercial debt right now maturing. And I think 1 trillion or at least $900 billion of it needs to mature this year. What's going to happen is they're either going to reset that, and that just pushes it, kicks the can down the road a little bit, but it's still happening. And that's going to continue on through 2027. They have to do something with this. And also with this maturitization of this debt, because this is all commercial. It's not like single family house stuff. This is big players in this situation, right? Blackstone, BlackRock, Goldman Sachs, JP Morgan, a lot of them have a lot of commercial real estate and their debt's maturing because they partner with a lot of people, right? So, but as this happens, with what was I going to say? With this stuff maturing right now, that is also they're kicking over Fannie and Freddie is in talks with privatizing. If they move that away from the government and they send this over to the private sector, the private sector managing this thing it's going to cost the cost of that capital to go up because it's not backed by the government anymore. And the stipulations are going to happen, and they're going to penalize syndicators. Because syndicators are the ones that their debt's bad right now because of they couldn't execute on their value add plans. They can't sell their properties. The feds aren't lowering rates fast enough. It is happening, folks. What does that mean? That's going to force owners to be able to trade their assets. Now, we're looking at deals that normally we would never be able to look at. I just went over a deal a little while ago where we were talking about below replacement costs. There was a property that they're selling it. The cost to replace it is about 500,000 a door. It's 160 units. And they will accept somewhere around the guidance on this deal, somewhere around 350,000 a door for per unit. So that's $24 million below what it cost to build this property. This thing was only built in 2018. It's a beautiful property. It's an A location, A asset, fully occupied, ready to go. And the developer slash owner, which is an institution, they have to sell because their debt's maturing in a relatively short amount of time. So they came to market. This right here causes people to trade their assets and compromise price. That means that that property is in a distressed situation. The asset is not distressed, but the opportunity of the debt maturing, causing them to trade this asset at less than what they would normally trade for. Basically, probably they're selling for less than the cost of building. Doesn't make sense. But that is the opportunity right now. And when you can take advantage of all four of these things, Trump, taxes, tariffs, and trillions of dollars maturing, all my T's, causes people to trade assets at less than desirable prices, which is what we want to take advantage of. And if you can do that, if you can get in, you can get great deals on assets, which is what we're trying to do. But you cannot do that alone. You have to go to the bigger properties. You can do it on smaller deals, but the pressure is not there. No one's going to trade their properties because Trump, if you're a mom and pop and you have a 20, 30, 40 unit deal, they're going to be like, we'll just wait, right? We can wait this out. Big people, the big players cannot. Their investors are like, hey, we want 5 years and maybe 1 year of an extension on that, which is their redemption period. And oh, by the way, after that times, we need our money, folks. That's how this goes. And when you can play this game and you recognize the upside, you recognize the opportunity in the marketplace, then you can start to see, right? But here's the opportunity with that. Well, let's see. When we're looking at deals, we're looking at this. I know this for a fact, and we're talking about investing money into real estate. So, number one, if you want to compare this, why I think the real estate play right now is the best. Real estate plays the best. Because if you just have cash, you got inflation. You're fighting against inflation. This is why real estate, I think, is the better play as it relates to investing. Real estate's king as it relates to investments. Because if you're just sitting on cash right now, you're getting hit with inflation. Your dollar's going down. Value's going down, period. It needs to be in a real asset. You got to take your cash out of the bank and or any retirement account, which I'll talk about next, and move it into a real asset that keeps up with inflation because one, there's income there. You got the tax advantages of those things. You got good leverage and good debt because you can get good debt right now, right? If you're buying cheap enough on an asset and you can wait. So the cash is not the play, right? If you have money in a retirement account, we'll just put IRA, 401k, you don't want that because you're going to get taxed later if you don't convert it, because you can actually use your IRA, convert it to a self-directed IRA and put it into real estate, and you can still do the benefits without penalties and without getting hammered, because that happens, right? Problem with this is later, if you do just leave your money in there, be like, I'm going to retire, I'm going to wait it all out, I'm just going to hold off. This wasn't designed for you. This was designed for Wall Street and financial advisors to take your retirement account along with the IRS, the benefit of that, and say, look, we will let them invest that money. We'll put it off into an account. We won't, and the IRS goes, fine, we'll let you guys do it. We won't tax it now, or they can pay the taxes and we'll let you trade it. Lock it up, let them do whatever they're going to do in stocks, mutual funds, growth funds, whatever, for Charles Schwab, Fidelity, Merrill Lynch, everybody that plays that game, right? A Vanguard. And then later, not give you any benefit. It rides the wave while they take their fees. And then later, when you want to take your money out, because you will have to take your money out, at least 4% as you hit a certain age. I think it's 72. If you live to be 100, right, and 25 more years of that, and you take out 4%, get because you have to out of there, and it's not supported by real estate that's kicking in cash flow. You'll be down to zero by the time you're 100 years old because that can't happen. You have nothing to leave to your family. So this isn't the best place to just leave your investments and hope that it's going to be there for you. Next, Bitcoin. This is all the craze right now. This may be good. This coin, coin, however that's spelled, you get it. Bitcoin. I just draw a circle around it because that's what it looks like. Bitcoin. Bitcoin. People love Bitcoin right now. It is way too volatile for me. I don't want the game. If I do Bitcoin, I will do like my mentors did. They raised money, they bought an asset, but they also raised the capital to buy Bitcoin along inside of the fund. But that floor of the fund is the real estate, and the Bitcoin got bought with the cash flow of the real estate. That's the only way. And then that way the value goes down. It can only go down to the level of that real estate piece. So don't use your own money to go buy Bitcoin. Even though the EFTs right now, there's a bunch of EFT Bitcoins. You watch it go. It was at 106. Now I think it's in the 80s, 83 or 86 or 82. I can't. That's too much, man. So I'd rather real estate first, Bitcoin second, right? Have my real estate castle buy the Bitcoin secured by that. That's the only way I would do that. But that's the new craze right now, and it's better than your dollar. Worst case scenario. All right. Then let's say single family house, single family house, single family house. That's what we're all told to do. Your mommy and daddy was like, buy a house, and you buy a single. I got that backwards. My brain's not working today. Single family house. Let's say you did the single family house thing. You're like, I'm going to buy a house because my mommy and daddy did it, and you're going to live there in hopes that that value of that property is going to go up. Well, that it might, but if you think about it, let's say you wanted to buy a house today. You're like, I'm going to buy a house, and that's going to be my nest egg. You had to buy it. It cost you 6% to buy it because you got your realtor cost, your broker, and the buyer's agent and your seller's agent. Your taxes, which are probably going to be anywhere from 1 to 2% a year on that property. And then you have your insurance that's going up like crazy. So that can average anywhere from 1 to 2% anyways, because that's happening. It's harder to get insurance on those properties. And then while that's happening, you got repairs and maintenance every year. Something's going to go wrong, period. And your costs are going to go wrong while you're living in it, tearing it up, going back and forth to work. You're stuck in that place. You got a 30-year mortgage on there. Today's interest rates on mortgages, I think, are 6%, 7%, somewhere in there. And you're going to have to put down, unless you're getting some FHA loan where you're only putting down 3%, you're going to get a regular loan somewhere, a conventional loan where you have to put down 20%. The average home in America right now, or at least in California, is 800 grand. You'd have to put down 160,000 to $200,000 to get a great house. And that might not even get you the best house. You're probably going to be pushing into like $1 million to $1.2 million home. And that probably is going to be built in the 80s or the 60s, and you're not going to really love it. You're going to tell yourself you love it because you're convinced that single family house investing is better, and it's not. Multifamily real estate is better. And then last but not least, your own business. Your own business. This is probably the only other one. Invest in your own business, invest in your marketing, invest in sales, invest in your people, invest in scaling your company. But you don't need two businesses, which is why you should take any additional income from your business, invest in it, live in it, pay yourself a salary, pay your team, continue to spend any overage of that. You turn around and you throw that money in here, and you have this money duplicate the money you invested. Have it double down, have it pay you cash flow while you focus and you keep your main thing the main thing, which is your own current business. This is the only one I would believe. If you're going to double down, double down. But again, you don't need two businesses. You need one that works. You need investments that work for you. Big difference. You got to learn to multiply money. But you can't do that if you miss, like I said, the opportunity, which is happening in the world right now. So now, most people don't have time to run off and buy their own multifamily deal. You're busy running your business, or you're busy working your job. You're busy taking care of your family. You're busy making sure that you continue to grow and scale and monitor stuff. That's the game. But if you want to do it with me, that's what I did with Bell Capital. I was like, hey, I'm going to go get my friends and my connections because I got that opportunity to reach out with you guys and go, do you want to invest money with me in some of the deals that we're looking at? If so, let's do it. If not, let me help you go do this yourself. I'll show you what to do. Keep watching, keep playing this game. But together we can all win. Because if not, we'll miss this opportunity. Like this is the same thing that happened in 2008. And it happened in the 90s. And it happened in the 80s and then the 70s and then the 60s and the 50s. It continues to happen every 10-year cycle or so. But unfortunately, when you are in it, you don't know. Like I said, it's like watching a car wreck. There was something that happened when you were watching that car wreck that if you really are honest, you look back and go, oh, I remember I missed it. Do not miss this, though. This is why I was talking about this. Trump, the taxes, the tariffs, making people the maturities in debt. 2008 wasn't a home crisis. It was a debt crisis tied to the houses. That's what sank the market. This is no different. But this time it's not going to sink the market. This is going to be the big people that are transferring these big assets to the next group of people who are prepared for it. You got about 12 to 18 months to prepare for this. I'm prepared for it now. That's why you've been watching me do stuff. And people are like, oh, well, you haven't closed the big deal yet. No, 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 no. There's a lot of people who didn't close the deal. There's a reason why. Look at all these syndicators out there who lost their ass, who just bought in 2018, 2019. Those are the assets we're looking at. And because of it, we're looking at newer, nicer, bigger quality assets because we're not picking through trash. I'm on my way to be a big guy, and I want to do that with you, right? There's a reason why I took my time. There's a reason why I've been doing this because I've been sitting. It's like going hunting. I'm not a hunter, but I know if you sit at the top of any tree or cat box or whatever they're called, and you look down, you can kind of watch and you can see, and you can take your shot when the right buck comes, if you're shooting bucks, or if you're fishing in a boat. You can cast the small ones, use the small ones to catch something big, or you can keep casting and have the right lure to be able to cast the fish that you really want. And that's what we're doing. So, what is that? Great location, great asset, cash flowing already, tax advantages with an asset that is stable with a long-term horizon that we will not lose no matter what, because we're going to do the right thing by ourselves, by our investors, and for you. All right. So that's the opportunity. Take advantage of it. I know that went a little long, but I'm convinced right now that that is the right thing for me. It's the right thing for you. I want to do it with you if so. So if so, go to bell-capital.com. You can schedule a call, book a call with us, myself or someone on the team, or you can hit get started and you can go to our platform. You got to be accredited. It's a minimum 100,000, and you can take a look at the paperwork. You can do your due diligence. You can hit schedule a call and you can talk to somebody on the team so we can answer your questions and get you going. If you have cash, you got money in a retirement account dying, let's do something together. Or you can text deal to 760-531-8500, and somebody on my team will reach back out to you and answer any questions you got, get you the information about the investment, and we can go from there. So like this video, share the video, comment on the video, give it a thumbs up or give it a thumbs down. Don't be a hater and a hider at the same time, but I wanted to share this with you. Don't miss this opportunity, guys. I'm telling you, you're going to look back on your life and you'll be like, shit, I should have listened to that guy, Vic. He was giving me game. All right, man, let's go. Let me know if you need anything. Boom. Are you an accredited investor with $300,000 or more liquid in the bank? I want you to come and partner with me. Look, if you love real estate, passive income, and positive cash flow, appreciation over long periods of time, and you're willing to be patient, come invest with me. Go to bell-capital.com. This is for accredited investors with $300,000 or more in the bank, ready to go. Come invest with me. Go to bell-capital.com.